Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 14th of October, 2023, and this is the weekly technical analysis for the Euro, the cable, and the Aussie dollar for the third week of October. And as we see across all these three majors, they all hit a wall, looks like on the Thursday, and fell back to where it started from, except for the Aussie, where it fell back even further to a dangerous support level for the Aussie. And that was all due to Thursday's US CPI data, which came out higher than expected, and that caused a concern, and with the dollar spiking up, recovering back up, and causing the majors to suffer and retreat. So let's take a look at the other news that came out last week, and look ahead for this coming week on what could be the fundamental drivers for this coming week. And last week, as the precursor to the CPI data, the US PPI came out already higher than expected. So that was already an alert and a warning to the markets. Higher than expectation of 0.3, and then on the Thursday itself, CPI data came out higher than expected, 0.4 versus 0.3 month to month, and 3.7 to 3.6 year over year. So that was the catalyst for the US dollar to recover after pulling back. UK data met expectations, so not much impact there. And then on Friday, the US consumer sentiment didn't have much of an impact already, because the key driver was the US CPI data, which could be a cause for concern for the markets, with the Fed pondering whether they could raise interest rate next month, one more round before the end of the year. So that's what the market is taking into consideration. This coming week, again, more US and UK news with retail sales for both sides, and UK CPI is coming out as well, and UK jobs and Australian jobs report as well. So US retail sales forecast is slightly lower than actual for the month of September, which was already a surprise. So this time the forecast is lower. And similarly for the UK as well, the surprise was also in September, and this time the forecast is also a lower figure. So we'll see what impact or how much impact those will be to the US dollar's recovery after last week's CPI data, and whether it will have any impact to slow down the recovery, or whether it's going to help to continue to boost the US dollar even further. And for the UK side, we'll see whether it's going to be a concern for pound and sterling pairs. That's on the wrong side of the US dollar's movement. Okay, so let's move back to the analysis, and starting with the euro. It has been attempting to recover from the previous week's low, and bouncing off the 200 pip extension, and attempting to climb back up into the 138 pip extension area, but did not quite get there before Thursday's news of the US CPI data, and that drove euro lower. Found support at the 105. We'll see whether this is going to be the support from the left shoulder, as we mentioned last week, whether it's going to be an inverted head and shoulders pattern, or whether if this does not hold and it breaks down through the 200 pip extension, then that's going to be further weakness for the euro, which will be a concern, which means the dollar is going to continue climbing up higher. So the euro needs to find support within this region. Otherwise, it's going to be a problem finding support at this lows, recent lows. So it could still perhaps even form a double bottom to recover, and then possible consolidation within this area. So at the moment, it's struggling to maintain support above 105, and it's not able to break a 106.50. Let's take a look on the weekly time frame to see what the candlestick pattern is, and that was the rejection of the open from a couple of weeks ago and fell all the way back. So does not look good at the moment, with potential continuation of bearish momentum. And we'll see whether this 104.60 will hold. So it could still consolidate first until and hang on till the end of the month. We'll see how the US dollar price action is going to be. All right, this is from last week, so got to change this to the US retail sales. That will drive the market this coming week. Okay, let's compare this with the US dollar index, see how that perform against the euro. And here's the US dollar index, the DXY, and looks like it does look like an inverse relationship with the euro. After pulling back for the past 6 days, finding support. On Thursday's US CPI data, there was a strong bounce and recovery there. So it did not pull back all the way to the 105, managed to recover. So now, similar to the euro, this is possibly facing the head and shoulders pattern in this case. And it's critical that it breaks through this left shoulder's resistance and climb up to either test the 107 or even the 200 pip extension at the 107.25. Otherwise, it could also consolidate in this larger range until either could be also forming a double top, similar to a euro double bottom. Let's take a look on the weekly time frame. And that's the bounce of the support and did not quite get to 105, but a strong bounce from there. There's a possible bullish momentum to continue next week. And yes, it could face resistance at the previous week's high, just near the 107. So it all depends on this week's price action and whether retail sales will be a key driver. For the US dollar. And for now, the interim support, we can move that to the 105. Strong support below that now at the rising 55 EMA. And key resistance at 107 and perhaps even up to the 200-pip extension. Okay, let's move back to the other pairs. Moving on to the cable. And similar to the euro, it has also faced resistance after pullback retracement from the lows of the previous week, and was blocked at on Wednesday and then the Thursday with the US CPI data that drove the pound weakness back down towards the 121, getting close to 200-pip extension again. And likewise with the euro, that's critical now. It's got to hold support at the left shoulder. Otherwise, it could dip lower, and last hope is at the previous week's low for possible double bottom bounce. Let's see how the US dollar is going to drive the movement for next week and possible impact to the other pairs. So let's identify the swing high here. Seven. It's going to be at the interim resistance. Major resistance at 138 now, with the 200 and the 55 coming together, dipping lower. This is a crossover here, which it's a delayed signal there. But 120 is going to be the major support psychological level. And apart from the US retail sales, there's UK news this week. Is jobs CPI, which will be a major one, and retail sales. So that will also drive the cable movement, and not just the US dollar. So on a weekly time frame, similar to the euro, with a higher spike through for rejection. Now it's sitting at a critical support area. Okay. So critical week coming up for the sterling pairs. And let's move on to the Aussie dollar. And this coming week, there's also some news from the Australian economy with their central bank releasing their minutes of their policy meeting, then followed by Australian jobs report. But in this case, the Aussie dollar has broken through the left shoulder support and already right at the lows of the previous week, so it needs to find support for a double bottom bounce, or otherwise it's going to be further weakness for the Aussie dollar after closing below the 63 round figure. So that's showing some bearish momentum and weakness. So this is going to be significant support at 62 now. And significant resistance can already move down to the daily 55 EMA, along with this recent high up here. And if you take a look on the weekly time frame, it's going to be a very bearish looking candle, more bearish than the euro and the cable. So this is looking very weak and trying to find some support. And most recent support is at this swing lows at the 62, so that's possibly the where it's heading to. And that was from the just over a year ago, from September of last year. So it is sitting in a very precarious position now, with no other support than possible continuation towards 62. All right. So do check out my other videos on spot gold and dollar yen, where spot gold has broken through higher. And do stay safe and have a good trading week, and cheers for now.